Welcome to BigONE Weekly News Update. I'm Sophia. Global markets are entering a fragile period marked by escalating trade tensions, tightening liquidity, and persistent caution across crypto assets. While prices have stabilized after weeks of heavy selling, underlying macro and structural risks continue to build. Crypto remains in extreme fear. Bitcoin has fallen more than 45% from its October all-time high of $126,000 and is now down for 4 consecutive months. Last week, BTC hovered near $67,600, with Ethereum around $1,960 and Solana near $82. For 3 straight weeks, Bitcoin has traded in a tight $65,000 to $72,000 range. Volatility has compressed significantly, a pattern that historically precedes major directional moves. The Fear and Greed Index sits at 8, signaling extreme fear. While such readings have often aligned with long-term opportunity, they do not guarantee immediate reversals. Trade policy and macro risks intensify. U.S. fourth quarter GDP disappointed, core PCE inflation surprised higher, and long-term Treasury yields climbed amid fiscal concerns. The U.S. dollar recorded its strongest weekly gain in 4 months, and oil rose over 5% as geopolitical tensions involving Iran escalated. A key development came from the U.S. Supreme Court, which ruled that emergency powers cannot be used to impose tariffs under IPA. However, the administration quickly implemented new tariffs under Alternative Trade Authority, reinforcing a broader structural shift toward protectionism in U.S. policy. Liquidity signals turn more cautious. Liquidity conditions are showing signs of strain. Usage of the Federal Reserve's standing repo facility has risen to yearly highs, while the Treasury General Account remains elevated, both indicating tighter cash conditions. Reports of stress in U.S. private credit markets have added to caution. Meanwhile, major U.S. equity indices have moved largely sideways for months, a pattern that often masks weakening internal momentum. Crypto market structure turns defensive. Spot Bitcoin ETFs still hold roughly $85 billion in assets, with no mass outflows but limited new inflows. Trading activity has fallen sharply, with daily volume down more than 60% week over week, reflecting reduced participation. Derivatives markets show clear deleveraging. Open interest remains subdued, perpetual funding rates are neutral to slightly negative, and institutional positioning appears cautious. Implied volatility has eased, though downside protection remains in demand. A pivotal technical moment. Bitcoin is testing its 200-day moving average, a key long-term support level. The current consolidation presents a potentially high-risk-reward setup, but confirmation requires a decisive breakout. With volatility compressed, liquidity tightening, and geopolitical risks simmering, markets appear coiled for a significant move. The next major direction will likely be driven more by macro catalysts than by crypto-specific developments. For now, the market remains in a pressure-building phase, quiet on the surface, but unstable underneath. Join BigONE today and take advantage of the growing cryptocurrency market.